Hi, I'm Jenny Guy.
I'm Tom Armstrong.
Welcome to Intel Snacks. This is a series where we unpack an interesting piece of intel or a current event and what it means for compliance teams, and we do this while eating snacks. Today, we are going to talk about prediction markets, which has been a really hot topic in the news. But before we dive in, Tom, tell us about the snacks that we're going to be eating today.
People know I have a sweet tooth now. So from the other side of the pond, we have Tunnock cakes, which was founded by Tom Tunnock circa, 1890? I saw this on Snack Wars. We're doing Tunnock cakes.
I can't wait. So stay till the very end to get some very candid snack reactions as we try our Tunnock cakes. But now let's dive in. So we're going to talk prediction markets. This is really interesting because they're not a new concept. This kind of idea of trading on information. I definitely studied these in like my econ classes at grad school, but right now they are really taking off. So before we talk about kind of the trends and what we're seeing, Tom, do you want to give a quick overview just on what they are and how do they work?
Yeah, let's do it. Let's dive into these. This is, as you said, just such an interesting topic right now. You've probably heard the name if you haven't actually placed a bet on one of these prediction markets yourself. You've probably heard the name, seen headlines, maybe you've seen a Polymarket chart on Twitter or on CNBC. But maybe we just start with kind of what are they? At the core, it's really just a platform where you can buy and sell contracts. Contracts meaning like a trade that's tied to a real world outcome. So not necessarily company earnings or currency pairs, although there are some that are out there like that. The vast majority of these contracts are based around real world events. Did this thing happen? Yes or no? And the really interesting thing that we're saying is that you can place a bet on almost anything. If you go to Polymarket right now, we're recording this on Friday afternoon. There are bets on the Masters, elections in Peru and Hungary, or the price of crude oil. Will it be a certain amount on a certain date, right? Really big ticket items. But then there's much more granular events like, will J.D. Vance meet with Iran before April 15th? What's going to be the number 2 global Netflix show this week, right? So the breadth is remarkable. And because these markets operate largely on-chain or on-chain exchanges, they're accessible to retail participants in a way that traditional derivative markets never really were. And then mechanically, basically, you see a market. Will the Fed cut rates by July 31st or whatever the date is, right? The contract may say the price is 60 cents, right? That price is basically the market's implied probability. So there may be, if it's 60 cents, it's 60% probability that it's a yes, right? And then the payout is, if you win, is a dollar, and if it doesn't pay, it's 0, and you basically make or lose the difference. So that's basically what they are. Very, very binary outcomes, and as you said, like really, really starting to take off.
Yeah, the volume in which it's taken off has been incredible. So we did some research here at TRM and found that from early 2025 to January of this year, the prediction market trade volume has pretty much 20x'd from 1.2 billion in early 2025 to over 20 billion in January of 2026. And as you mentioned, part of this is because of the just expansion of events that people are betting on. And I think most notably, and why we've seen a lot of prediction markets in the news, just mainstream news recently, is because of bets placed over the events of the Iran war. So are there currently any guardrails in place for the types of trades and what you can bet on?
Yeah, so I think there's a couple things to be said there just in terms of the risks. There are some on the kind of terms and conditions in these websites, they say that there is some level of, call it quality assurance on the actual market that you're trying to make itself. And there actually has to be a market to make, right? If we placed a bet on, will Tom and Jenny's Intel Snacks episode go over 5 minutes, no one's going to bet on that. So there is some level, but it's not clear exactly to what level of extent they go to actually control the markets that are out there. So that's kind of one. And then you've got layered in all these kind of other, market abuse type risks. So the one that's really making the headlines right now is the idea of just trading on material non-public information, or MNPI. And it's not just trading on MNPI, but it's really, are you trading in a market that you can directly control the influence on the outcome? So prediction markets are really only useful as information aggregators if the prices reflect widely available public information. Once it becomes someone trading on MNPI, there's no integrity in that market, and it can just be an extraction mechanism, right, to get value. And as you said, we've kind of had some really high profile examples of this in the past few months. So the one that most people probably heard about was a trader on Polymarket on whether Venezuelan President Nicolas Maduro would be ousted. And just hours before the U.S. forces kind of came in, the trader, had placed the bet, walked away with, hundreds of $1,000s in profit. So that's definitely a big one that's causing a lot of concern. There's also manipulation of the underlying event itself. And this risk is maybe a little bit more exotic, but think about if a market has a large enough notional value attached to a specific outcome, does that create an incentive to make that outcome happen? Right? That sounds extreme, but it's a legitimate concern that regulators have flagged and that has been published in a number of studies on whether that actually then will influence the choice that the people can make who control that decision. So particularly for markets that are tied to political decisions or government actions or military interactions, right? That is a big area of concern. The big question here is kind of where will the regulators take some of this, and it gets a little bit complicated. It really depends on a lot of number of factors in terms of who regulates the markets. The CFTC has come out and staked a position to say that these event contracts are swaps under the Commodity Exchange Act, and they fall under federal jurisdiction. States may have state gambling authorities may want a piece of that regulatory action, right, to the extent that the traders are actually in the states. There are several cases that are working themselves through the Court of Appeals. If we end up with split decisions there, we could see a case at the Supreme Court. There's also potential bills that have been proposed to kind of curtail some of these risks. So it's like many things in crypto, an ever-changing regulatory landscape right now.
Yeah, for sure. I think the topic of prediction markets, and we've talked about this just philosophically, is really interesting about what it kind of showcases in like human interest and human thought. But like practically speaking, we are starting to see some evidence of market manipulation. We even analyzed some patterns of like pretty new wallets coming to these trading platforms, making bets on very specific events, looking like they have shared ownership, not making any previous trades, walking away, tripling, doubling their what their bets were, and then basically like sweeping these to other wallets. And so if I'm like a compliance practitioner on the call, like how do I start to think about this new typology, and like how can I look for it, and what types of actions can I take or should I take?
Yeah, you nailed a bunch of the big ones. What's so cool about crypto compliance is you're really taking, this is true whether we're talking about trying to find money laundering typologies or market abuse, you're really taking the kind of classic traditional red flags and just putting twists and wrinkles into them. And so if you think about, when I think about prediction markets, my brain goes to penny stock kind of markets as well. There's a lot of parallels here. And so red flags you can think about is, and you mentioned some of these, but like, did a person come in with no trade history, place a very outsized bet on a single position, like a really high conviction trade, and win big? What percentage of that trade represented the total trading volume on that day? Was the contract thinly traded? Because it's happening on chain, there's other signals and data points that we can leverage. So after the winnings were paid out, did they off ramp to a high risk exchange in some foreign jurisdiction? Was the bet placed by wallet addresses that are completely brand new, as you said? They've never been used before. What about just the timing and proximity to the event? Did they have that bet in place weeks before, or was it hours before the contract actually stopped? So those are all pretty familiar things if you've worked some of these market abuse cases that you can kind of take and leverage. And really, it's, again, we have new data available, and it's taking the new with the old to do the detection and prevention.
Yeah, super interesting topic. I think this is one where we could spend a whole webinar talking through the different nuances, the different types of markets and bets, different typologies that we're starting to see, and regulatory kind of advances in this space. But we are almost at time because we promised that these would be bite size, which leads us to our snack. So while I unwrap my tonic cake, do you want to tell people what a tonic cake is?
As best I know, because we haven't tried them before, they say milk chocolate tea cakes. I don't know if that's a UK thing to call something that's really like a cookie a tea cake. I see the word biscuits all over it. I think biscuits is used in like, when I think of a biscuit, I think of like biscuits and gravy. Biscuits is like cookies, I think, for our friends across the pond. So yeah, to me they look like, chocolate marshmallows.
I think that's a really good description. It's a chocolate covered, like if you've ever eaten like marshmallow fluff, that's right underneath the chocolate. And then, I think there's kind of a shortbready cookie at the base.
Yeah. The shortbread cookie is perfect. I love it. It is very, like, it falls apart really easily. But, yeah, that's delicious.
This was a good choice. Was this better than Cheez-Its?
Totally, 100%. It's very airy too. Like, to me, a perfect dessert. Like, I don't have serving sizes. Serving size is the whole thing. Like, it's the entire pint of ice cream. It's the entire bag of whatever. I could eat 4 or 5 of these and be totally good. Versus like a Reese's, you eat one Reese's and like it feels pretty heavy. I like these. These are nice. Kudos to our friends across the shore.
Yeah, I couldn't agree more. These are actually perfect, not too sweet. I'm gonna really enjoy finishing mine off camera. But thanks so much for staying for the snacks. Join us next time for new intel and new snacks.
I'm a little bit alarmed by the packaging. It says it's been enlarged to show texture. So I'm looking forward to texture, if that's what's happening. But let's get one of these out. They're much smaller than I expected, to be honest, in these little individual wraps. And it looks kind of sticky inside. So let's get into one. Oh, there's like cream coming out the bottom. This is going to be sweet, I can tell already. It's definitely sweet. It's aggressively sweet. And there's no texture to that, it just dissolves. Kind of like a sponge. I don't know what I was expecting. Yeah, that's definitely not my favourite. Tonic's tea cakes are way better than these. This pack of 6 is going to live in my cupboard for a long, long time. Yeah, not great. Super sweet. It says there's cream in the middle there. I'm not sure this is cream. Yeah, not my favourite, guys. Sorry. Enjoy the Tonic's tea cakes.